Hello everybody and welcome to IC Markets Market Commentary. My name is Adam Harris from Trade with Precision, and today I want to shine a spotlight on several different instruments. I'm going to start off here with the dollar index. So the dollar index is really the performance of the dollar against a basket of other currencies, which includes sterling or the euro, Japanese yen, I think even Danish krona or Swedish krona. And really just what I wanted to highlight here is it has obviously, as we know, over the last year been strengthening quite a bit. We had relatively big correction, which was overdue from at least from a weekly perspective. We've got very little data on this at this point in time, but we had a bit of a correction. Now the market appears to be strengthening again. In other words, it's very keen in principle to resume that trend, but it's already starting to stall. So the reason I bring this up is because this will impact all the asset classes, the currency pairs, commodities, the indices as well. And this is something that I want to just keep an eye out. Sometimes the week ahead is relatively clear, and we have a situation where, at least in today's video, there is the potential for a change. Now, a couple of weeks ago, we had a really big reaction from with regards to CPI numbers coming out of the US, and on Thursday this week, we will have CPI numbers coming out again, and so therefore we could possibly have a bit of a reaction in the markets. And so I just want to keep that in mind, that it's stalling at the moment. It does appear as though there's a bit of indecision, and so I'm just applying some extra caution. Note also that in the past there's been some strong resistance up at this area towards that 114 level on the dollar index, and therefore we could likely encounter some resistance there. So the trend is to the upside. We're stalling a little bit over here, and it's going to start to show itself if we go across and have a look at some of the other charts. So the next one on my list here is just bringing in crude oil out of the US, and the reason I bring this in is because the market has produced quite a strong bullish move up, broken through this level of resistance. It's coming back down, and now it's in an area where it's deciding whether it wants to continue trending to the upside. So the best way to get a sense of this is to get a look at the bigger picture. You can see the bigger picture here. We've had a strong uptrend. This is the invasion of Ukraine by Russia, and that caused a bit of a knee-jerk reaction. Then the market went up again, had a strong reaction against that, and came back down into the moving averages, into the old highs here, produced a bullish candle. So currently in October, we are not even halfway through the month, and we are producing a bullish candle. So it's both currently looking bullish, broken the previous high, implying, ladies and gentlemen, that it is likely to close bullish. But because we're only halfway, not even halfway through the month, I wouldn't want to count my chickens before they hatch. But the idea is, in principle, that oil appears as though it is preparing to resume its uptrend. All right, to continue up, not necessarily accelerate the way it did before, but just to continue to climb at the previous rate that it did. So I'm keeping an eye on this, because when I look at this and I take the daily into account, it becomes more and more likely that if we close as a bullish candle and we start to head higher, we start to break that and start to push back up towards 93.71, then it becomes more and more likely that the monthly candle is unfolding in line with that trend and is becoming more and more bullish, and that provides me with potential trade ideas. So an example would be, if this candle closes bullishly, I could possibly look for an entry above the high of that with my stop loss below the low, and targeting a 3-to-1 or up into these old highs up here, and obviously taking some partial profits at 1-to-1. That's my personal preference. This is not financial advice, just explaining to you my thinking here as a trade idea. And so that's one of the things that is certainly there. We've got a contradiction. You can see we've got the possibility here for a bit of a downtrend on the weekly. The monthly is wanting to continue its uptrend, and the daily appears as though it wants to continue its uptrend. So this happens on a relatively frequent basis with all instruments. At some point, there's a contradiction between the monthly, weekly, and daily, and this is just what's happening here at the moment. So that is, first of all, on my watch list. Then I wanted to talk about the global indices as well. So I've got the Dow up here at the moment. Yes, we're on a downtrend. We almost started to shift back up into an uptrend. We failed to do that. We came down, we've broken new lows, but we are near these old highs up here. And it is not completely, and again, because of this indecision with the US dollar, it is not a foregone conclusion that we're either going to continue down or head up. I just wanted you to see here that on a couple of these charts, it's trying to produce a higher low. It is trying to turn around, and this is all tied very much to that dollar. It's obviously sensitive to inflation and recession fears or fears of those, and therefore it's hypersensitive to certain numbers that could reveal whether we're going to continue with a global recession or there's going to be a bit of a recovery. And that's most likely why the market is stalling at the moment, is to wait for further figures until it can decide which way to go. So this is the thing. Although the current trend is to the downside, I'm just warning that if we start to break, especially above this candle which finished weak in September, if we start to break above that high, it becomes more and more likely that we're going to start to recover from that. So I'm exercising some caution. The trend is not a foregone conclusion at this point in time. I'm going to wait actually for price to either break above the high here, above this little consolidation, or break below that before looking for continuations in either direction. There's a little bit of bullish divergence creeping in the indicators. It's adding to my caution. Euro Swissy. Okay, so Euro Swissy here as well. This sometimes happens when we're going to get a shift in trend. We get this is a possible upside down or inverted head and shoulders. We get a nice little bit of a left shoulder, then a head, but we don't have the other side yet. We'd have to see price coming back up here in order to at least convince me that we're going to see a change in trend. We've got clear bullish divergence here. The MACD is trending higher. We've got the RSI trending higher. The market is exhausted to the downside, and it is trying to decide whether it consolidates and then carries on, consolidates and recuperates, or whether it changes trend. This is why I'm also exercising some caution with it, but I did want to say that predominantly the trend is to the downside. You can just see this very strong bullish candle, and now the market's trying to decide if that bullish candle was just a knee-jerk reaction because it was overextended, or if there's a possible change in trend, and there's a definite battle going on there. So again, it's one of those that if it starts to hit high, I'm going to start to look for buying opportunities to the upside. In principle, though, it is relatively bearish, and that Swiss franc is not going anywhere. It continues to strengthen. So most other charts are starting to look bearish against it. So for example, if I just bring up pound Swissy, you can see that that is looking like very much like it wants to continue to the downside. So these can offer some good intraday opportunities. If I go down, say, the 4 hour or the 1 hour, any kind of break and a retest can offer continuation to the downside. I'm just trying to give both a bigger picture and a smaller picture here, or at least an intraday and sort of higher time frame perspective here, because there are times when everything is aligned and there are times when things are contradicting, which is what we're having at the moment. Next on my list, I wanted to talk about Tesla. I'm just bringing up any popular stock, and I decided to choose, I picked Tesla today. Wanted to show you it's heading down towards these lows here, and this is a really kind of a key area, because if it breaks through here, then I expect obviously a bit of an accelerated move to the downside. However, until we break through that area, it has every decent chance of finding support, and it could actually work its way back up, so we could be range bound. So I'm just talking about this at the moment. In principle, it is range bound, and I want to be cautious of that. I'm saying this would be an example amongst other tech stocks as well. You've got your PayPals and your Netflix and your Googles and Amazon, but they're all approaching major key levels here where they could actually genuinely find support and then start to recover from that, and also they could start to break through that, and there's continuation, trade continuations or trend continuations to the downside. For me, this one looks a little bit overextended to the downside, and therefore I'm expecting a bit of a bounce. And again, I think that this is something that is likely to be impacted by the reaction to numbers that the US is waiting for at the moment. So let's just go and bring up tech stocks as well. You'll see if I bring up tech stocks, you can see they've started to breach below these new lows, but also it's immediately pushing back. You've got some wicks that are forming here. The market is not yet relaxed about heading much lower. It's trying to kind of put on the brakes, and that's why I'm exercising that caution. And there are times to do it, and this is one of those times to exercise that caution. Okay, so in amongst the currency pairs, the ones that I like, the weakest one at the moment is the Australian dollar. Australian dollar continues to trend lower, and therefore should provide trend continuation opportunities for day traders, especially breaks of low. This is a consolidation, so you can see a really nice move, bit of a consolidation on the higher time frame, which is the 4 hour. You can see just pull back in here, and now it's trying to decide if it's going to continue down or change direction. But overall, this is looking nice and bearish, a little bit overextended from the moving averages. At some point, I do expect a bit of a pullback, but overall, this is a very nice weak currency and is offering me, I think, safer, considering GBP and Euro are not quite sure where they want to go. The Aussie is the weakest out of the bunch. And actually look at other pairs as well. So if we look at, say, Aussie yen is also starting to drop low, especially once it starts to break through these levels of support. I expect continuation. A little bit further down, let's look at Aussie Kiwi. Aussie Kiwi also looking nice and bearish. So again, for day traders, this offering some really nice trend continuations, looking for pullbacks and continuations to the downside. And then we have, say, Aussie Swissy, also very, very bearish. Also trend continuations heading lower down. There's a little bit of a consolidation drop and then a consolidation. It's not the prettiest trend I've ever seen. That's a lot better over here. It's starting to hiccup a little bit over here, but still, principally, the direction is nice and bearish, and therefore, relatively speaking, safer to engage in than some of the other markets. And even here as well, you can see Aussie CAD also bearish. So all of the Aussie pairs heading low. It's the weakest currency pair, and therefore, I think relatively safe to put on my watch list and looking for those opportunities. With regards to some of the other charts, I'm really just going to keep my ear to the ground with regards to news, especially in the middle of the week, and see how this goes. If the trends continue, then I can go back to those same charts and start looking for trend continuation opportunities. Otherwise, should there be an unexpected, weakening of the US dollar, then the possibility of not just the end of this week, but next week, the possibility of there being trading opportunities in the other direction. In other words, euro dollar strengthening. Euro dollar strengthening. In that sense, then, or pound strengthening, then, then that looks good. Then I'm just as excited about that if we start to break above these highs, because we're long overdue for a correction to the upside, and that would provide some, I think, much higher probabilities, safer opportunities, especially on majors, commodities, and indices. There we go. Thank you very much.